Welcome to Personal Finance Channel. The purpose of this video is to provide an overview of the basics of stock investing, so you can feel more confident and informed when it comes to putting your money into the stock market. We'll be covering a variety of topics, including what stocks are, the potential benefits of investing in stocks, how to get started with stock investing, how to research and evaluate potential stock investments, and some of the risks and considerations to keep in mind. By the end of this video, you should have a good understanding of the basics of stock investing and be ready to start exploring the stock market with confidence. So, before we start, if you enjoy watching similar content, do like and subscribe to our channel. So, let's get started. What are stocks and why invest in them? Stocks, also known as equities or securities, represent ownership in a company. When you buy stocks, you become a shareholder in the company and have the potential to earn a share of the profits through dividends or capital appreciation. There are many potential benefits to investing in stocks. One of the main advantages is the potential for long-term growth. Over time, stocks have historically delivered higher returns than other asset classes, such as bonds or cash. This is because companies have the potential to grow and increase their profits, which can lead to an increase in the value of their stock. In addition to the potential for capital appreciation, stocks can also provide a source of income through dividends. Dividends are payments made by a company to its shareholders, usually in the form of cash or additional stock. Not all stocks pay dividends, but those that do can provide a regular source of income for investors. How to get started with stock investing? There are several ways to invest in stocks, and the best option for you will depend on your individual circumstances and investment goals. Here are a few options to consider. 1. Brokerage account. One of the most common ways to invest in stocks is through a brokerage account. A brokerage account is an account with a financial institution or online broker that allows you to buy and sell stocks and other investments. To open a brokerage account, you'll typically need to complete an application and provide some personal and financial information. You'll also need to fund your account with money that you can use to make investments. 2. 401k plan. If your employer offers a 401k plan, you may be able to invest in stocks through this retirement savings account. With a 401k, you can choose to allocate a portion of your contributions to stock-based investments, such as mutual funds or exchange-traded funds, ETFs. 3. Mutual funds and ETFs. Another way to invest in stocks is through mutual funds or ETFs, which are investment vehicles that allow you to own a diverse portfolio of stocks with a single investment. Mutual funds and ETFs are managed by professional money managers, who select the stocks in the portfolio based on specific investment objectives. Regardless of which way you choose to invest in stocks, it's important to set clear investment goals and understand your risk tolerance. This will help you make informed decisions about which stocks to buy and how much to invest. Researching stocks. When it comes to investing in stocks, it's important to do your research and carefully evaluate potential investments. There are several tools and resources you can use to gather information and make informed decisions. One important source of information is financial statements, which provide details on a company's financial performance and position. These statements include the income statement, balance sheet, and cash flow statement. By reviewing these statements, you can get a sense of a company's revenue, expenses, profits, debts, and assets, which can help you evaluate its financial health and potential for growth. Another useful resource is company news, which can include press releases, earnings reports, and other updates from the company. Staying up to date on company news can help you stay informed about the company's performance and any potential risks or opportunities. There are also a variety of stock analysis tools and websites that can help you evaluate potential investments. These tools may provide data on a company's financial performance, industry trends, and other factors that can affect the stock price. Some tools may also provide stock ratings or recommendations, but it's important to remember that these are not always reliable indicators of a stock's performance. Once you've made an investment, it's important to keep track of your holdings and periodically reevaluate them. This can help you ensure that your portfolio is aligned with your investment goals and risk tolerance, and make any necessary adjustments to stay on track. Risks and considerations. It's important to understand that investing in stocks carries some level of risk, as the value of your investment can fluctuate based on various factors, such as market conditions, company performance, and economic trends. Here are a few potential risks to consider when investing in stocks. 1. Market volatility. The stock market can be volatile, which means that stock prices can fluctuate significantly over short periods of time. Market volatility can be caused by a variety of factors, such as changes in interest rates, economic conditions, or political events. While market volatility can create opportunities for investors, it can also lead to losses if you're not prepared for it. 2. Losing money. There is always a risk that you could lose money when you invest in stocks. This can happen if the stock price decreases or if the company experiences financial difficulties. While it's impossible to completely eliminate this risk, diversification and proper asset allocation can help to mitigate it. 3. Company-specific risks. There are also risks specific to individual companies that can affect the value of their stock. For example, a company may be facing legal issues, changes in management, or competition from other companies. To manage these risks, it's important to understand them and take steps to mitigate them. One way to do this is through diversification, which means owning a mix of different types of assets, such as stocks, bonds, and cash. Diversification helps to spread risk and can potentially improve your overall investment performance. Proper asset allocation is another important factor to consider when investing in stocks. Asset allocation refers to the way you divide your investments among different asset classes, such as stocks, bonds, and cash. By properly allocating your assets based on your investment goals and risk tolerance, you can potentially improve your overall investment performance and manage risk. Thanks for watching this video on how to invest in stocks for beginners. We hope you found it helpful and feel more confident and informed about the stock market. Good luck with your investing journey.